Hey traders, it's Scott Stewart once again, and I've got a couple of free options trading tools that I want to share with you in this training video. For those of you that are looking to trade options, or even those of you that are already trading options and just want to get better at your craft, and don't we all want to get better at the craft of trading options? So let's check it out real quickly. All right, so let's get into it. So I think that there's two predominant issues that options traders face more than anything. Number one is just simply grasping all of the different option strategies that are out there and understanding what they do and how they work and when to use them. I remember multiple times back in 1987, starting as an options specialist at a brokerage firm, thinking I had mastered all of the strategies, and lo and behold, there's another strategy and another strategy and another strategy. And when you start adding ratio trades into existing strategies, you can almost create infinite numbers of strategies out there. And so it gets difficult if you are new to options trading, or if you've just focused on maybe a couple of strategies, cash secured puts, covered calls, iron condors, whatever it may be, to understand that there's a whole other world out there of options trading. So number one, I want to give you access to a free option strategy guide, online option strategy guide, that I think is about as good as any of them out there, as sort of a one-stop shop to understanding option strategies and how they work and when to use them. Number two is really mastering a risk graph. Risk graphs, I think, are probably one of the most underutilized tools for an options trader. They show you pretty much every aspect of an options trade that you really need to grasp the real nuts and bolts of that trade. One of the things that we like to say in our live trading room, one of the mantras that we follow, is that we want to hope for the best but expect the worst, right? And if you can go into every trade expecting the worst and have a plan of action for that, then you're probably going to do a little bit better than otherwise. But if you don't know what the worst case scenario is in a trade, it's really hard to prepare for that. So option risk graphs are a great way to use that. So I want to show you a couple quick links here that can help you with regards to these things. So the first link that I want to show you is a website, and it's optionsplaybook.com, optionsplaybook.com. And this is a website that's put out by Ally, which is a brokerage firm, and I don't necessarily endorse them and I don't use them, but I love the way they've put this free website together. So there is a little bit of advertising here. They're obviously trying to entice you to trade with them. But beyond that, there's some really good information here. So they have a couple of links here that I'll just show you real quickly. They do have a page called Options Basics, and it just basically talks about how options work, key options terms, how does volatility and the Greeks work, cashing out of your options, open interest, how all of that. They've got some webinars that you can click into. And then the Rookies Corner starts off with some very basic trades. And these are trades right here that a lot of people, whether it's writing covered calls, buying leap calls as a stock substitute, selling puts, cash secured puts, are some of the only trades that a lot of people will ever gravitate to or stick with. But you can ramp it up from there. You can go to their option strategies page, and this is my favorite page right here. You can see that they've got quite a bit of links here, and they've got trades set up for pretty much every trade that's out there. I was just looking through it here. I don't see an example of a box trade, which is one of my favorite trades, but they do have things like double diagonals, which is an awesome, awesome trade if you can set it up correctly. Pretty much every trading strategy that you can think of is in here, and they categorize them all from basically, kind of starting positions to more veteran type trades to seasoned traders. They've got all different types of trades. If you look at all option strategies, again, pretty much everything that you've heard of, you can find in here. So for example, let's find one here. Back ratio spread trades with puts. Very popular right now with how the market is reacting in such a bearish manner. And so every one of these strategies that you click on, it's going to give you the setup. It's going to tell you how to set up the trade, when to run it, when it is appropriate, what market condition it would be appropriate in, what the break-even point for the trade is, what the sweet spot for the trade is, maximum profit, maximum loss, and investment margin requirements and how you can set that up. So very good place to get started on looking for option strategies. And if you look through this again, they've got a risk graph that is associated here with each one of these, where you can really very quickly in a visual format kind of look at a trade and go, oh, that's what I'm looking for right there, or that's what I'm looking for. And so risk graphs are the next thing that I want to chat with you about. So one of the tools that I use is a risk graph, and I wholeheartedly believe in the power of risk graphs and how they can really help you understand the nuts and bolts of whatever trade it is you happen to be looking at. And I use a brokerage firm called Tastyworks. I like them primarily for the commission charges. They're fairly decent on their commission rates, but they also have, I believe, one of the best visually representative risk graphs out there of all of the brokerage firms. Now, there are some limitations with that, so we're going to get into that here in just a second. But let's take a look at maybe some information that a risk graph can give us and why I think they're so powerful. Now, I've got Roku up here already. That's fine. I'll use that one as an example. Let's go to the trade tab. Let's say that we want to go build a trade. And let's say that we want to build, oh, goodness. Let's go look for maybe a short iron condor. Those are popular trades. And let's find a trade date. That's March 4th. That's 22 days out. I guess that's a fine date to look at. Let's pull this out just a little bit here. I'm going to create some different numbers for us. Okay, let's give this a shot. So, first of all, if you're not familiar with iron condors, you can obviously go to the website that I just gave you and do some research on those. But iron condors are interesting trades. They're delta neutral trades, and the idea behind an iron condor is that you can make money with this trade whether the stock goes up, whether the stock goes down, or whether the stock stays the same. Okay, that's the idea. So rather than picking a specific target, you pick a range. And in this example, today is February the 10th, 2022. And so I'm looking at these March 4th options. They're 22 days out. And this is the risk graph here. And what it's telling me is, listen, over the next 23 days, if you were to put this particular trade on, this is how the trade would work. Anything above $95 a share, you make money, and anything below $245 a share. So you think, well, that's a pretty good range for that stock, and it really is. If you look at the probability of profit on this trade based on standard deviations and implied volatility, it tells us that you've got about a 94% probability of success with this trade. Now, that's pretty good. That means if you do 100 of these trades, statistically 94 out of 100 are going to make you money. So that's great. But the challenge that presents is that you see the numbers right here, and you can see them if I put the mouse overlay on here as well. That red number up there that says P&L expiration right up here at the top. I'm putting up $475. To do this transaction. That's what this trade's going to cost me, is $475, and it has a max profit of $25. Now, that's not a bad profit. That's what would that be? Almost a 5% rate of return in about 3 weeks. That's what, 70+% annualized potential rate of return. So it's not a bad rate of return. And it's also a very good probability of success trade, 94% probability of success. The problem is the risk-reward ratio with this trade. If you look at the numbers here, you can see that what is the max loss? Well, the max loss is how much money we put up to do the trade. We put up 475, we are going to risk 475. So you're risking $475 to make a $25 profit. Now again, we've got a 94% probability that it's going to work for us, but again, you're risking $475 to make $25. And there's other things that we can put on here as well. If we were to put on, let's say, the theoretical result there, that little orange line that just popped in there, that's an interesting line. That tells us where we would be profit and loss wise on this trade on any specific day. Now today obviously is where this line is fixed, and that's going to change as the days go by. But this hard and fast line down here, this is where we would end up in the trade at expiration, right? March 4th. This orange line is where we would be during the trade as the trade progresses. And so that skew, what is called an option skew, you can see that it's a little bit more favored to the downside, right? We would actually benefit in this trade if the stock price actually fell just a little bit here with that curve or that up down smile that we're looking at. So this is basically how you look at a risk graph. What's the max profit? What's the max loss? Where's the profit zones? How does that trade interact with your P&L as time goes by? And how can you change it? How could you manipulate that around? Okay. Now, let's say that we didn't want to do that. Let's say that we didn't want to do this particular trade. We like the probabilities of success, but we don't necessarily like the fact that we're risking $475 to make $25, right? Well, we could go do something else. We could go maybe find something like, let's find maybe the exact opposite of an iron condor. Let's go look at a long butterfly call. And let's go look at these exact same dates right here, March 4th, so 22 days out. And let me widen this out a little bit here. And now you can see that this is a vastly different trade, okay? Now again, if you don't understand what a butterfly call is, go to the website, check it out, and you'll get a little bit better understanding of that. So this is pretty much the exact opposite of the trade that we just did. The iron condor that we just looked at had a very wide profit zone, but a very poor risk-reward ratio. This trade has a very small profit zone. We call this a tent, but a very good risk-reward ratio, right? And if you look at the numbers here, you can see that in this trade, I don't have to risk almost $500. I'm only putting up $52. That's how much this trade is going to cost me, is $52. Max profit on the trade is $448. That means that in 22 days, March 4th, that this trade finishes at a price that is right under the tip top of that tent right there, okay? So from a risk reward perspective, this is a much better trade, right? You're only putting up $52. You could make almost 9 or 10 times your money back. That's a much better return than getting a 1 to 10 ratio. Here we're getting almost a 10 to 1 ratio, right? It's almost inverted. What's the downside of this trade? Well, it's got a 9% probability of success. There's only statistically about a 9% chance that over the next 22 days, Roku is going to finish right at the inside of this tent, right? That's the challenge. So neither trade is better or worse than the other. They all have their own unique pros and cons, but it is helpful to be able to understand this so that you know what you're risking in a trade, what your potential reward is, what's your chance of actually having that be a successful result. Now, the problem and the challenge with this risk graph right here is the same problem or challenge that you're going to find with most of the brokerage account risk graphs out there. Number one, I love the visual representation that you get in Tastyworks, but there's a couple of challenges. Number one, you see down here, you only have the provision for putting 4 legs in on the trade. So if you want to start doing ratio trades, if you want to start doing spread trades with protection built inside of them, you're not going to be able to illustrate that in a risk graph. Number two, with Tastyworks, it doesn't illustrate very well calendar trades, options where you're using different expiration months within the same trade. So I want to give you a quick access to a free website where you can solve all of those issues. So the free website that I want to share with you is optioncreator.com. Optioncreator.com. Free website, you can go there, you can use it, and it just is a very, very simple, straightforward way to build risk graphs if you don't have access to a more complicated software program that can do multiple legs and graph different strategies. So there's basically long calls and short calls. You guys know what it looks like. If you buy a long call, you're going to make money if stuff goes up, and you're going to lose money if stuff goes down. Gets into some pre-formatted option strategies here. We just looked at a couple of ones. A long butterfly was an example that we just looked at, right? And there's the example of another long butterfly. So the cool thing about this particular risk graph is that you can add positions. You can go build as many legs into a trade as you would like, and you can put whatever stock you're trading in there. You can add in all of the different strike prices that you're using, and you can graph whatever you want. So mastering risk graphs, understanding options trades are a great way to get better at our options trading skills. Hopefully this has been helpful for you guys. As always, thank you guys for watching. And if you find value in these videos, I'd love it if you'd click the like button and subscribe to the channel. Turn on your notifications. And if you want to leave a comment on the training videos, I do always try to respond to each and every comment. So appreciate you guys. Take care.